May is over, and we are experiencing some of the most bullish times ever, at least in the indices and stock market. This video, I would like to go over some of my trade performance for May and talk about small wins but big gains, because those small wins add up and lead to those big gains, and how you should also try to uh, never stop growing, never stop learning, and never stop trying different things in the market. I have two accounts here. This one account did pretty decent for the month of May. There's a gap here. There's a week here where I really didn't take that many trades. And I was really trying to do more of what I was doing previously in the previous month. And then I had another account. Let me see if I already have it pulled open. Yeah, this is the other account where I was trying something a little bit different, and it didn't really work out too well. As you can see, there's a whole lot of red days, but the purpose of some of these prop counts is to try things, because it is not really a real account, like those prop counts are there for you to try different things and have the upside of getting the payout, but also use it to record data. At least that's what I do. I definitely use it to record data. I'm definitely in a pretty good position financially where I'm not really dependent on whether I get these payouts or not. I'm just trying to get this data. And the payouts are great, but again, when you are in a rush and you're trying to cycle through all the payout, all the evaluations very quickly, you quickly eat into your own personal capital. And if you don't actually have a really good edge, you're just donating your money to the prop firm, and that's what they're banking on, right? So let's go over some of the trades that I made. This account is up $1,700, and it's crazy that Tuesdays were the most consistent day on this account, and they really weren't. I didn't really have a consistent day except for Monday. On both account, Mondays are pretty good, and Fridays, no, it's really just Mondays and Tuesdays. So those first 2 days out the week. But let's get into some of the trades themselves. Oh yeah, I'm also going to talk about my trade performance with crypto as well. So for my crypto folks who like to know what I'm doing over there, please stay tuned. I'm going to talk about that as well. So here's a pretty straightforward trade. I took buys at this 49,250 level, and I sold at the 49,500 level. After we reclaimed the level, you see we made a resistance here, and then we reclaimed it. I placed a limit order right here, and I believe my stop loss, I actually don't remember how big it was. Maybe it was 100 ticks, 150 ticks. I'm not exactly sure, because I've been trying to trade pretty much all three indices to figure out which one do I really have the best edge with the way that I trade. So I don't actually remember what the stop loss is, and I definitely would always like to remember that to give you guys good information. But if I had to guess, it was probably below this swing low right here. So we tag me in, tag me out, and that ended up being a $996 trade on that one. Very similar to the 11th. I'm pretty sure I traded the Dow Jones and did the exact same trade. I really just am taking these for those quarter level rotations from 250 to 500, just keeping it simple, not overcomplicating it, buying at a support level, selling at a potential resistance level, wash on, wash off. So here's an example of me taking the same trade on ES. So we have the rotation from 7375 to 7400. I had to remember to turn on executions this time, so you can see I bought at 7375.25, front ran it just a little bit, and then I actually got out early a little bit here because there was a supply zone here, and I was just a little hesitant on it stalling, but as you can see, it did get to the 400 level. So definitely not perfect. I think I took a loss on the other account. That's right. What is this? This is the Dow Jones. So Dow Jones was just knocking my head in, So this is an example of it not going so great. As you can see, I took buys at 49.01. It completely liquidated, and I got stopped out at 49.374, and they rallied all the way back up. So if I had a wider stop, I could have, suffered through all this drawdown and ATP, but I wasn't really trying to go for a 1-to-1. So 571 on one and $600 loss on the other. And I think I remember what I was doing now. I was trading different indices on different ones. And interestingly enough, the one where I was mostly trading the Dow Jones was the account that was red, even though I was doing that on the other. No, I was trading NASDAQ in April, and I was doing pretty good. So it's not enough to say that Dow Jones is not really a good edge for me, even though that it was the account where I took most of the L's on. And I was trading mostly NASDAQ and MNQ. I mean, NASDAQ and SPY over here, but that's just kind of like how the month is. Like some months NASDAQ is going to be crazy good, and then some months it's going to be terrible. Some months it's going to be Dow Jones really good. Some months it's going to be terrible. So it's just how the distribution is going to play out. So this is a great example of a continuation play here. So as soon as the market got above this 7560 level, I went long. So you can see I got long at 61. So as soon as we popped back up here, I took a breakout and I got out right at 70. So that was a short trade. But you really don't need, when you're day trading, you really don't need a big move. And I think that's what people get caught up on, is trying to catch a big move. And you have to really just choose what type of trader that you're gonna be, man. Like if you're a swing trader, go for those big moves. But if you're a day trader, I don't know if it's wise. Like I've seen really prominent, really good traders lose 80% of their account trying to catch these big moves on these indices. And I'm sure they'll make it back, but it's just like you don't want to lose 80% of your account, guys, trying to catch these big moves. Like it's just not, that's not the move, man. Like account preservation is key. Like if you go into a serious drawdown, you need to know how to size down, and that's going to be an ego hit, but you got to do it. Another example of a good trade, this was on the NASDAQ. And this should have been recently, actually. This should have been the 29th. Yes, we're getting towards the end of the month here. So I took buys at 30,350. I exited at 30,395. Ideally, it should have been 400, but I think it probably stalled a little bit and I closed early. This was a 200 tick move, and right after this, NASDAQ completely collapsed. We can probably show you that. And then it rallied. So yep, this was the trade. I'm on a 15-minute time frame, but I took buys right here, sold right here, and then the next candle just pretty much shit the bed. So that's what I'm saying. Like you can find the moves that work best for you, or you want to get in and get out, or you can try to look for those big moves. If you tried to look for a move like this, a move here, you would have had SL hit. Again, if you took that exact same idea, took it here, you would have caught probably about 400 ticks. But that's not the most consistent thing. When you are thinking of day trading, you really want to prioritize consistency. When you're thinking of swing trading, you want to be thinking of a higher R multiple. So pretty much that's the gist of the futures trading. I'm going to try to keep this up, and by next month this account will either pass or be blown. Either way, I'm cool with it because I'm doing pretty good on my crypto account. So let's shoot on over to there. Okay, so this is a trade that I took on Lena. This is a continuation play. As you can see, the price is curling up on these moving averages. These are daily bars, by the way. This isn't intraday, so these are daily bar closes. We're surfing the moving averages. We reclaim this resistance level right here. We're above all this volume. I was like, cool, I'm gonna get long. So I got long. This is when I was floating. I also got long on open here at the 61% retracement, which was also a previous support level. I think I ended up losing on that trade, actually, unfortunately. But Lena started to pop, and Lena started to pop again. It reached this resistance zone here. I think I started to take a little bit of profit there. I was floating 81%. And there you go, TP. So that's a continuation. This is the ideal continuation play. Like, moving averages curling up, price consolidating, contracting on it, is holding its momentum, and next is up. That's the ideal continuation play, and that's basically what I'm looking for with those continuation plays. I think this is an intraday trade that I tried to catch, but that just died, and I think that was the very last 15-minute intraday trade I tried to take. So this was a resistance trade that I took on Uniswap. So I put the arrows there so you can see it. So resistance is resistance again. We were already red on the day. We were breaking down on an hourly time frame, and I was like, cool, I'm gonna get short. And same idea with Jupiter. Jupiter had a nice trend here. It was holding a trend, broke the trend, retested the trend, and gave you a nice bearish engulfing candle. I was gonna place a limit order here, but I decided against it, and wanted to wait for a little bit more confirmation. There's nothing wrong with that. It's up to you. But anyways, Uniswap ended up collapsing, and after chopping for a bit, is this Uniswap? Yeah, this is Uniswap. Ended up collapsing, so I ended up floating on those. And same idea here. I was taking it lower, so I wasn't taking it from 3.9 to 3.8. I was actually looking for lower prices because I was looking at how extended this move is. It was like a very extended move, and I was like, okay, this is probably gonna roll over here, so I'm gonna go ahead and jump in shorts. And as you can see, pretty much capitulated, and Jupiter is actually still falling now from those entries that I had. So, and boom, hit TP. So I was looking for a rotation of essentially 2 levels here, from that 5 to the 3 level, and I'm pretty sure I closed right about there, even though I saw a bit more downside. I think I was holding about 25%, but ended up actually I held. I remember I closed 80% and held 25%, and I was like, yeah, I think this is gonna fall some more, so I just held 25%, and it kept capitulating, and I ended up closing the Uniswap after the expected value started to change. So we started to curl back up, and as you can see, I took multiple short entries here. So I was sizing in, so I took a short here on this candle, I sized in here, I sized in some more here, and then it fell over, and then I closed here, and closed here. So I closed into weakness, and then finally closed when we started to get a bigger pop, and we started to get back above that 375 level. I was like, yeah, I don't want to get back too much profits here. So I took a short on hyper liquid and got clapped, because that thing is crazy bullish. If you're still here, I'm really giving y'all some really good game when it comes to some of my playbook plays. The continuation plays are slowly becoming my favorite because they are both high probability and high reward. You're catching a trend trade on ideally a higher time frame. I think I can't really see it. Okay, so this was a 30-minute time frame, so it's not exactly a higher time frame. That was just my entry time frame, but you're really trying to find confluence on the daily for an entry. Now, when you can get on this front side where in the daily the price is above the 10 and 20 EMA on a daily, that's going to be your juicer. As you can see, this really performed really well, and this one didn't perform nearly as well. But anyways, I pulled up to the chart and I saw that market was SPX was trending. This is the crypto, not the indice. It was trending, so I placed a limit order right at 37 with a stop loss below the level, and then it went crazy. It went straight up, and I had closed 80% at 40 cent, and I left the rest to run, and I believe I got stopped out of it. If I could, I clicked the wrong thing here. And so this was my entry. So entry down here, and then I rolled it all the way up, and I pretty much top ticked it at 40 cent, and then I closed the rest right when we start breaking down here. I trailed my stop right below this low. Once we broke down, I got out because the expected value starts to change. So again, I'm really giving you guys some really good game here when it comes to continuation plays and how to squeeze out some good profits of the market, because those continuation plays, man, those are what's up. I'm slowly liking them a bit more than some of my mean reversion trades. Mean reversion trades, they've been okay, but you know, they're just iffy. They're just iffy. So this is an example of a mean reversion trade. This was like, we went parabolic here, and then I entered, stop loss at highs of the day, and it pretty much collapsed. I don't know why this is not loading, but yeah, it pretty much collapsed, and ended it pretty good. And the last trade that I recently took was AIA. I entered here on the daily. I have a picture of it before it popped. Let me see, is this it right here? Yeah, this is AIA before it took off. So I'm telling you, these mean reversion plays, which are basically support resistance plays, but it's not always support resistance, but essentially it ends up kind of being that. It just depends on whether you're taking a support resistance play or you're taking something that's gone way too far in one direction and you're trying to revert to the mean. So I would say this is a support resistance play / mean reversion play, because the mean is that 20-day EMA, and we're towards the bottom of the Bollinger Bands at a support level. So I was like, and we got a bullish engulfing candle on the daily. It hasn't closed yet, but I'm like, look what happened the last time. It went straight up. So I'm like, this is worth playing here. Unfortunately, I didn't get the full size on, and because I was expecting a bit of a pullback, and it just literally rocketed straight up that very next day. It just went parabolic, and I caught 370%. So yeah, it was a pretty fucking good one. It was a leading gainer on the day. Unfortunately, I took some losses as well, because I was also taking longs on Pepe and Uniswap. So this is an example of support resistance, also mean reversion play. This is on Uniswap, and this is on Pepe. This is looking great, but again, they end up letting me down, so I just took losses on them and I closed. So this is Uniswap. It just collapsed, and I was like, you know what, I'm getting out. And this was Pepe. I'm like, let me get out of this. So that was my those are my trades for the month. And once again, you just got to know where you lie on the spectrum. If you want small consistent base hits, those definitely add up to big gains, or you can look for the big gains with the consistent losses, 30-40% win rate, but you can still do good. At the end of the day, you'll end up being at the same destination. There's no one thing that's better than the other. It's just, do you want to diversify how you approach the market? And that's something that I personally like to do. I pretty much use the prop firms as a account where I'm trying to look for things that are consistent. And then in my personal account with the crypto, I'm averaging like a 30-40% win rate, and I'm really looking for those big explosive R multiples of 3R plus multiples on those trades. Not every time, because it really just depends on the trade. If it's a mean reversion trade, it's a high probability trade. Usually it might be 1 to 2R. Sometimes it might even be a negative risk to reward if I end up getting stopped out or taken out at break even. For going forward, I really would like to do a better job of managing my trades better. I could have avoided taking the loss on both Uniswap and Pepe and some other trades this month if I was just more aggressive on my break even and being okay with re-entering the trade, just knowing that if the trade pops 1R, it's okay to go to break even, because you at the end of the day, capital preservation is key. So that's all I got for you guys in this one. Link in the description box below if you want to join the Discord, completely free. If you want the indicator, it's also in the description box below. I'll see you guys in the next one.